Hi everyone, and welcome back to my channel, Mile High Stocks. In today's video, I'm going to tell you how I invested my tax returns for 2020, as well as my top stock picks going into next week. But before we get started, please go hit the subscribe and like buttons, and be sure to turn on notifications to help me out with the YouTube algorithm. I am so close to 1,000 subscribers, and it would mean so much if you could hit that subscribe button to help me get over 1,000 subscribers. Thank you. Now, let's get started. The first thing we are going to go over in this video is how I invested my 2020 tax returns. Because tax season is almost over, everyone should be receiving their tax returns soon. I'm going to share with you right now how I invested my tax returns. This year I received around $4,500 in tax returns, so I had a very good year in terms of what I got back. And the first thing I did was open up an account with BlockFi.com, and I also downloaded their app on my phone. BlockFi is a cryptocurrency exchange that allows me and you to buy Bitcoin and other cryptocurrencies. The best thing about BlockFi, and the reason I chose it, is because it is secured. Bitcoin is secured in an actual wallet, unlike Webull or Robinhood. But the other reason is I get 6% interest APY per year by loaning out my Bitcoin that I own. So I receive 6% dividends per year by loaning out all of my Bitcoin. And that is the second reason I chose BlockFi as my exchange. So there you have it. That is what I did with my 2020 tax returns. I put over $4,500 into Bitcoin using the BlockFi cryptocurrency exchange. The next section of this YouTube video is going to be top stock picks for next week. And the first stock I want to go over today is CLOV, or Clover Health Investments Corporation Class A stock. They are currently sitting at $9.02 per share, and they recently had a massive gap up that drove the stock above the 200 exponential moving average last Friday. And the reason for this is because Reddit and other social media platforms could be preparing for a massive short squeeze similar to GameStop, but with CLOV instead. And I'm going to show you an article right now from Yahoo Finance regarding that. This is from Yahoo Finance. Chamath backed Clover Health in apparent squeeze with massive short interest reminiscent of GameStop. Short interest in Chamath, I apologize, can't pronounce his last name, backed Clover Health Investments Corp. is at 150%. So what they're saying is that the short interest for this stock is 150%. To put in perspective, when GameStop's short interest was at its highest, it was at 140%. The level is reminiscent of the huge short interest in GameStop that was followed by a retail trading frenzy in January when the shares rose 2,000%, prompting a hearing in Congress. Several other stocks, including AMC Entertainment Holdings and Nokia Corporation, went on similar roller coaster rides. Shares of Clover soared as much as 36% Friday as chatter that the company could be a prime target for a short squeeze spread through chat rooms and social media boards. The stock has traded 150 million shares in midday trade, 10 times the average volume. Twitter's SPAC guru pointed out the pop in Clover shares to IPO edge earlier today. On February 5th, the company said the Securities and Exchange Commission has started a probe after a research report accused the health insurance company of misleading investors when it went public. That came after short seller Hindenburg Research published a report claiming Clover failed to disclose a Justice Department probe. Hindenburg said it was not betting against Clover shares, but wanted to show the value of critical adversarial research. That is the end of the article. Let's go back to the stock chart now. So as you can see, there's a lot of negative news around CLOV right now, and as a result, you had a lot of short interest and short sellers coming in and shorting the stock and buying put options. But because the stock has reached all-time lows, it was recently at $6.31 a few weeks ago, you are starting to see these short sellers having to cover their shares, which is how you see this first pop right here. Short sellers came back in, brought the price back down. Immediately popped 36% again a few days later when short sellers had to begin covering their shares. I would not recommend CLOV as a long-term investment, but always manage risk accordingly if you're looking to get in on CLOV for a potential short squeeze. Do not throw your entire portfolio into CLOV. Manage risk accordingly and to make sure you do not blow up your account. But if we are going to see an actual short squeeze, you could easily see this stock double with people and short sellers covering their shares. The next stock I am looking at is Apple. Apple is currently in a consolidation phase around $134 a share. I traded this as a swing trade about a week and a half ago when it was around $128, $130 a share. And I rode this all the way up to around $131 to $132 a share. And the reason is because I was looking at the 50 exponential moving average crossing the 200 exponential moving average in the upward direction, which I saw as a very bullish sign for a swing trade. But right now it's starting to level off, and we could see a small pullback back down to 132, but I don't think we're going to see a big drop on Apple in the near future. I'm keeping Apple on my watch list because I think it has the strong potential to make a move back up to its all-time highs at $145 a share, which is where this red resistance line is. The next stock I'm looking at for next week is Disney. Now, I'm not looking at Disney in terms of a swing trade. I'm looking at it in terms of a long-term investment over the next 6 months because you have seen a good pullback from 204 all the way down to 187, and it's currently consolidating and creating a pennant right here at the 200. As you can see, here's the pennant, and if we can get a breakout above 190, it's got nothing but clear skies above 190 once it breaks out of this pennant. But the reason I'm looking at it in terms of a long-term investment is because Disney's Disney Plus platform, their streaming platform, is doing incredibly well, where they're coming out with a new show every 6 weeks, and there is news that they are going to be reopening their theme parks in California and Florida in May or June. So keep an eye out for that, where they will get an increase in revenue from their theme parks. And actually, their theme parks are their main source of revenue. So their earnings report should be very strong for the next quarter, which is why I'm looking at Disney as a long-term investment over the next 6 months. The last stock I am looking at for next week is JMIA, or Jumia Technologies. And the reason I'm looking at this is because we've got a descending triangle here, and I'm really interested to see if it will break the critical support at $31.50, or if we're going to see a reversal and go back up towards the 200 exponential moving average. Now then, I'm not getting in on this stock right now because I need to see if it will break the descending triangle. Descending triangles are usually a very bearish sign, but on rare occasions you might get a reversal where the stock completely reverses itself and decides to shoot up very quickly. So I'm looking at this next week for an ad over $35 a share, which would mean it will have broken this descending trend line and would have broken out of the descending triangle. That's all for today. Thank you for watching, everyone. And please, if you have not done so already, help me out with the YouTube algorithm by clicking the subscribe and like buttons, as well as turning on notifications to help me out with the YouTube algorithm. I'm almost at 1,000 subscribers, and I would be so thankful if you could help me reach that goal. Thank you and have a great day.